Well, good morning. It's me, Kenny Polcari. Today is Friday, April 26, 2024, and here is what you need to know to get your day started, to figure out what happened yesterday and what's going to happen today. So yesterday, it was like, are we lost in space? Right? Stagflation now becomes more of a reality. Bond yields push higher. The 2-year kissed and pierced 5%. Google and Microsoft, they just crushed it last night after the bell. And investors appear to be in love all over again. Eco data today is all about inflation. And what do we have for dinner tonight? We're going to have the Calamarata Pasta. It is delicious with mushrooms and heavy cream and white wine and shallots and garlics. Oh my God. Okay, listen, it was a danger, Will Robinson danger. This does not compute moment in the markets yesterday morning, right? They lost in space, 1965, for those of you who are unfamiliar. Stocks fell hard, but they did end the day off for the lows, which might be the silver lining. The Dow lost 375 points, the S&P down 24, the NASDAQ gave up 100 points, the Russell down 14 points, the transports, though, bucked the trend, gaining 220 points, but remember how they got crushed on Wednesday. Transports, the equal weighted was up 18 points. So why do you ask, right? So think stagflation. Now, remember this, stagflation is persistent high inflation coupled with high unemployment and stagnant demand. So in yesterday's economic data, we got 2 out of the 3 data points that suggest we are potentially headed for a bout of stagflation. You see, while unemployment remains low at 3.7%, first quarter GDP fell to plus 1.6%, down from the fourth quarter's 3.4% read, and well below the current street estimate of 2.5%, right? So think potential stagnant demand. And then the quarterly PCE report, the price index, came in at plus 3.7%, well above both last month's read of plus 2% and ahead of the estimate of plus 3.4%. Think inflation or rising prices. And that news sent a Will Robinson alert to the smart logic algos, and boom, the bottom fell out in what felt like the bottom was going to fall out. And it did for a little bit, but then it recovered. Now, understand that a weaker GDP report would typically raise hopes that the Fed is about to cut rates, right? They stimulate the economy. But the ongoing sticky inflation just complicates the basic premise. And so the weaker GDP read, coupled with the rising price pressures, did not lend itself to a go-get-em mentality. And it did not support those sexy high growth names that have helped to drive the markets higher as a result, right? But I will say that while I think the move was a bit dramatic, I'm not really surprised, as the market was and is looking for a reason to shake the branch a little bit when the data veers from the expectation in a very nervous and kind of jumpy environment. We get that amplified response, which is exacerbated by the algorithms, right? Algos that are programmed just on mathematical formulas that do not lend themselves to the finer tuned human interpretation. And so it was what it was. Stocks suffered until we got an end of the day push led by 2 of the Mag 7 stalwarts, NVIDIA up 3.7% yesterday and Tesla up another 5%, and what I would say was some bargain hunting, right? Remember, NVIDIA was down about 19% and Tesla having gotten crushed down 45%. In the meantime, Treasury sold off. The TLT and TLH down 0.7 and 0.5% respectively on the back of that 7-year bond auction, as well as the stagflation narrative that now adds a new layer of uncertainty to the Fed, right? Now, remember, yesterday I said that swap traders were now expecting a September rate cut rather than the June or July. Well, after yesterday's data, guess what happened? Those traders pushed the rate cut out to December. I mean, wow, I think about what a nervous group of guys these are. The issue is that they never really wanted to believe me when I kept saying that the rate cuts are not happening this year. They kept telling themselves that the Fed would not only cut once, but they were going to cut multiple times. Something that made no sense to me and a host of others. And that narrative ended up pushing stocks higher. So now it's time to fix that narrative. And so what do you have to do? You have to reprice risk, which is exactly what is happening. As the sun moved across the sky, we saw the 2-year Treasury kiss and then pierce 5%. trading as high as 5.02% before ending the day at 4.99. The 10-year teased 4.73%. That was up 10 basis points in early trading before ending the day yielding 4.7%. And herein lies the problem. What will investors do if yields continue to climb and the 10-year kisses 5%? Well, all you have to do is go back to October when the 10-year kissed 5% to reveal the answer. Investors, traders, and algos became even more nervous. Money moved into safe haven, no-risk treasuries. Stocks backed off as investors considered what's next. Okay, so then what happened? Well, after the bell, as expected, we got some key tech earnings, right? After the market closed. Intel, Google, and Microsoft all reported. And they all pulled back the sheets and they gave us a look at what's been going on. Intel has been the underperformer, right? While they beat on earnings, they offered a less than robust forecast for the current quarter. And so traders and algos took that stock down 7.6% in the after hours. This morning, the stock is quoted at $32.50, $32.55, down from $35 yesterday, right? Which is where it closed last night, $35.11. Now, Google and Microsoft, on the other hand, well, they must be taking that little blue pill because their performance caused them to react like a 20-year-old. The headlines using words like stellar, crushed, blowout, outstanding, grand to describe what was going on under those sheets. Yes, they both beat earnings per share estimates. Google crushed sales estimates and announced a dividend, while Microsoft beat the forecast due to demand for their cloud and AI offerings. And this is what investors wanted and needed to hear. And while investors are excited about how AI is changing the world, they still want and they need to see that revenue is growing and profits are growing as well. And so that's what they saw yesterday in Google and Microsoft. And so they're excited. So in the end, Google, like Amazon and Microsoft and a host of others, are plowing money into artificial intelligence. And that is what the market remains focused on. Microsoft, thanks to their partnership with OpenAI, has been infusing their entire product line with AI technology. And that is a bet that is starting to pay off in spades. Customers are using AI to do a range of things like create documents, summarize documents, generate content, create and condense scripts, etc. Right? In the end, both of these earnings suggest that the tech worries just might have been a bit overdone and that they're now benefiting from the higher capex spending and a strong consumer. This morning, both of these names are up, right? Google's up 11%, it's $176.30. Microsoft's up 4% at $415. In fact, the triple Qs, right? The QQQ is the Invesco ETF that tracks the NASDAQ 100 is up 1% as well, right? What are the top four holdings in the triple Qs? Microsoft, Apple, NVIDIA, and Amazon, right? They make up more than 25% of that index. Now, this morning, it's also a new day. U.S. futures are up. Dow futures up 65, S&P's up 36, the NASDAQ's up 165. The Russell's flat. Last night's exciting earnings reports creating all kinds of action. Those blockbuster earnings reports are driving the gains this morning in tech and in the broader market, suggesting that the AI boom is alive and well. The question now is, can the reports of a few big tech companies carry the day and sustain the broader market rally? Well, 80% of the companies that have so far reported have beaten the estimates, right? So that's good. Yet the stock action has been underwhelming at best. Beats are seeing below average upside reactions, while the misses are being absolutely punished. And we still have, half of them, 250 companies to still hear from, right, over the next couple of weeks. Today, we're going to hear from T. Rowe, CNC, Chevron, and LYB. They all reported this morning. They all beat. Look for more from ExxonMobil. They missed on their earnings, but their revenues are up. Roper, AbbVie, HCA, all happening before the bell. EcoData is all about the monthly PCE report versus yesterday's quarterly report. Month-over-month PCE is expected to be up 0.3, year-over-year up 2.6%, while core month-over-month is up 0.3%, while year-over-year is up 2.7%. Personal spending up 0.5%, personal income up 0.5%, personal spending up 0.6%. Again, I would argue that the spending is up because it costs more to live, but let's see how they position it. Oil continues to inch a bit higher, up 30 cents at $83.90 a barrel, while gold is up $17 at $23.60. The dollar index is down a bit, and that's helping to support gold and oil and other commodities. We've seen the dollar retreat by 1% over the past week, but remain elevated versus a year. It's up 5% year to date. Gold will remain sensitive to the geopolitical environment as well as the Fed rate cut environment. For now, gold remains in the 2,300, 2,400 trading range, while oil remains in the 80, 90 trading range. European markets are up this morning. Spain up 1%, France up 1/3%. It's all about the earnings. That's what's in focus across Europe as well today. The S&P closed last night at 5,048, down 24 points. Yesterday, I was on with Charles Payne, and we discussed the technical levels of the market and what to be aware of. I repeated my analysis. 5120 is now trendline resistance, while 4950 is now trendline support. And we remain entrenched within those bands, right? I argued that if we test the trendline support of 4950 before, we're going to test resistance at 5120. I remain in that camp, 4950 before 5120. Remember, while Google and Microsoft are boosting sentiment today, they are more than likely not enough to boost a broader sentiment for a sustained move higher. Investors need to see the ongoing better earnings and better guidance continue. If we test support of 49.50, we must hold it in order to stop the bleed. Any failure to hold it is going to see the smart logic algos just light up on the sell side, canceling inline bids, leaving avoided prices that could easily take us down to the 4,800 level, which should be, like I said yesterday, a 5% move lower from here and a 9% move off the all-time high. Uncomfortable, yes. Out of the norm, not so much. Now, keep your powder dry for now. Let this volatility settle down. Stay the course with the names you own unless the fundamental story has changed. Your cash is earning 5+% in your money market fund as long as you have it in that money market fund in an interest-bearing account, which I'm assuming you do. As a long-term investor, you need to eliminate the noise and focus on the plan. And you know, as a short-term trader, all you want is more noise. You want as much noise as you can to create volatility. But you're not a short-term trader. You are a long-term investor. So decide who you are and call me to discuss. I'm always happy to help you talk about a plan, put the plan together, talk about your concerns, talk about your anxiousness if you have any, or just talk about food. Okay, so talking about food, what do we have for dinner tonight? Well, last night I made this. It's a Calamarata Pasta, which is shaped like calamari rings, shallots, mushrooms, white wine, cream, right? Garlic, all that stuff. It's simple, it's easy to make. I whipped it up in less than 20 minutes. For this, you need the pasta, right? The Calamarata Pasta. It's, like I said, it's pasta that's shaped like calamari rings. You need a mix of your favorite mushrooms, chopped. I used white button, baby bells, and shiitake, and I just chopped them and mixed them. Chopped shallots, crushed garlic, olive oil, white wine. I used Pinot Grigio Santa Margherita, salt and pepper, heavy cream, and of course, freshly grated Parmigiana and Romano cheeses mixed, right? Now, get started by bringing a pot of salted water to a rolling boil on the back burner just so that it's ready when you need it. Now take out a large saute pan, one that's going to be able to accommodate the cooked pasta once that it's cooked, right? You want to add a splash of oil, so go around the pan a couple of times, and then you're going to add the chopped shallots and the garlic, right? Saute that for 5 minutes or so. Now add in the chopped mushrooms all together. Season them with salt and pepper. Saute that for another 5 minutes ago. If you have to add a little bit more oil, feel free to add just a little bit more oil. Now, after that, after the 5 minutes, you're going to add in a half a cup of the white wine. If you don't want to use white wine, use chicken stock, right? You want to mix that, turn the heat up high, let the wine or the chicken stock evaporate. Then turn the heat down and add in a half a pint of heavy cream. And then turn it down to simmer and just let it simmer, stirring it to mix it. Now put the pasta in the water, cook it for the 8 minutes or until it's al dente. When it's done, use a slotted spoon and add the pasta to the saute pan and mix it well. Now add in 1 ladle of the pasta water, which we also know as the tears of the gods, and a handful of cheese. Mix it all together. Serve this immediately, always having extra cheese on your table for your guests, right? It's a simple dish to make. Everybody will love it. Before you know it, it's going to be gone. In any event, look, it's Friday. It's another beautiful day here in South Florida. It's going to be a great weekend. I'm on my way to the studio to be on with Stuart Varney at 9 a.m. Until Monday, take good care.